Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, you may have noticed that those U.S. markets continue to be on an upward trajectory, a complete tear to the upside. In fact, the S&P 500 has been up 16 of the past 18 weeks in a row. That has not actually happened since 1971. Of course, a lot of this has been driven by some key large cap tech stocks, so I thought it would be great to bring in somebody who's actively managed ETF called Grizzle, is specifically focused on some of these key areas of disruption and of growth and of technology. For that, Thomas George is joining us. He's the founder and CEO, I should say, of Grizzle. And also, interestingly, Thomas, welcome, former head of commodities at TD. So you come to us with a real significant background in fundamental analysis and across sectors. Welcome. Thanks for joining us.
Catherine, always a pleasure, and yeah, great to join you. Hey, listen, a great run in the market, and it just feels like we've entered a revolution in AI, and it's just spurring another great run in the markets, and it just it really harks back to the idea that just staying in the market is just so important, and a lot of people try to really get cute, and we've never been advocates of getting cute. This market's the market over long periods of time just does an incredible thing of delivering real wealth to investors.
Right. And but at the same time too, you do have to get the stock picks right, which you have done. And the ETF is up, I think you said over 40% over the past year or year and a half.
Over the past year. Yeah, so we're up 33% in 2023, and then over the last year we're up 40%. So yeah, it's been a great run for the Grizzle Growth ETF. The ticker is DARP, DARP. We've like the concept out of the gate was disruption at a reasonable price. They're in DARP, and our view was that you don't need to go very far out the risk curve to get exposure to disruption, right? You don't need what I call science projects that have no earnings, no pathway to earnings in the next, in the short period or in the medium term. Those are the type of companies over 10 years that may be something. What we look at in DARP is to say, listen, we're looking for companies that are profitable now or have that cash flow inflection in the next 4 to 6 years, meaningful cash flow inflection. And that really is the future. And the way I think about it is we've evolved from a place of Benjamin Graham where it was deep value investing, and this is where information was hard to come by. So you truly could pick up things for pennies on the dollar. Like that was no joke, right? That was that classic price to book investing, right? Then you move to an era of Berkshire Hathaway. There was a lot of great notes written about Charlie Munger and his influence on Warren Buffett. And he's like, listen, you don't have to buy these cheap companies, right? Like you can buy great companies at good prices, and that revolution started. And then after that, you entered over the last 20 years the great GARP revolution, growth at a reasonable price. And if you think about where Berkshire really made their money over the last 20 years, it was their massive position in Apple, which nobody would categorize as a value call. So we think that era was really hard, brought in through just the stocks that worked, and Berkshire played that as well. And we believe now we are in the new era of disruption at a reasonable price, where trends are moving so fast that you have to look further out than you did before, right? And each one of these requires what I'd call more creative, qualitative take with quantitative behind on where the future will head. And I think that the investment world is filled with numbers guys who just want to color by numbers. Like I can't possibly think out 4 to 6 years because we don't do that, and that's not value. And you just have to think bigger than that.
Right. And, and part of the industry too, in some ways, is because money managers, are graded on their quarterly performance. It's been difficult, I think, over the past number of years, and that's one of the criticisms in terms of how the industry has evolved and how it actually impacts investment decision making. But hearing you speak, obviously, you're taking the longer term view. Difficult to do for some people, but that's the approach. I do want to talk. We only have about 30 seconds left. But so we'll pick it up on the other side of the break. But the reality is, Nvidia has been one of the key drivers of the market returns as of late, hitting $2 trillion in market cap. But I'm wondering if when you bought it, did you really see the AI revolution, or did you see the ability that they were creating in their chips for gaming that would then translate into something that requires such speed and accuracy like AI? I'll get your answer on the other side of the break.